Hello, everybody. Hi, everybody. Can you hear me? Can you see me? Can you hear me? Can you see me, everybody? Hello, everybody. Can you hear me? Can you see me? Here you go. All right. Everybody, if you can hear me and if you can see me, just give me an A. Give me an A if you can hear me and if you can see me. Give me a confirmation. Not just Amna. I want everybody to respond. Please. Hello. There you go. Everybody, get going. Excellent. All right, brilliant. Before I start, let me give you a little introduction about myself and what I do so that you understand what to whom exactly you're talking to. Well, the FR revision is organized by PPIM, the largest ACCA institute in Sri Lanka, with our presence in India, Maldives, and Vietnam. So we are present delivering lectures in this country. I am a senior lecturer for FR, and I'm also the CEO of PPIM. And also, I work with other institutes, ACCA institutes, in terms of operations, ACCA operations. I manage the businesses for them for ACCA. Apart from that, I'm also running an accounting and tax practice from UK and outsourced operations in Sri Lanka. And I also undertake certain assignments for my clients. Well, in terms of lecturing, I'm experienced for the last 10 years lecturing for ACCA. My specialization is financial accounting FA, financial reporting, which we're going to look at right now. I also lecture for FR. I also lecture for audit and assurance. I also lecture for SBR, strategic business reporting paper. That is the advanced version of FR paper. I'm also a rank holder, a prize winner for ACCA APM Advanced Performance Management paper. Well, quite experienced, although I look very young, quite experienced, and I've been in the ACCA fraternity for a while. And when you look at prize winners, I produced the highest number of ACCA Sri Lankan prize winners in Sri Lanka, highest when you take the history, including last December, that is the recent paper. Recent paper, I produced two Sri Lankan prize winners at the same time for the December paper. The previous session also, I was able to produce a prize winner. So in terms of prizes, I've been producing prize winners throughout. And the reason why I could produce prize winners is because I'm able to show them certain methods, certain techniques, certain shortcuts, which are easily understood and which can be applied in the exam scenario. So during this revision phase, I'm going to do the same. I'm going to show you certain things. First, I'm going to show you the approach, and then I'm going to show you exam technique. So we'll be looking at two things, the approach for exams and the exam techniques. And then, of course, I will also be providing you with a study plan. The study plan, I'm going to provide it to you today, immediately, so that you understand what exactly you are supposed to do. Well, a quick question, everybody. How long do we have for the exams? Anybody? How long do we have for the exams? Counting days? Anybody? Anybody? Have you started to count days? How long do we have for the exams? Hello? 25 days. I've got a response, 25 days. Our exams will be falling on 4th of March 2024. Today is the 8th of March, and unfortunately, February has only 29 days and not 31 days. Don't forget that. Correct? So 7, 10, 17, 18, 19, 20, 21, 21, 22, 23, 24, approximately 24 to 25 days. That's right. The question should be, okay, fine, Zian. Is this 24 days enough for the exams? If you ask me today, if this 24 days enough for the exams, I would say absolutely yes. This 24 days is enough for the exams. Not just to pass, it is enough to get more than 70 for the exams. Well, you could have studied for the last 4 5 months, you could have studied, or you could have studied for the last 2 to 3 months. But trust me, what you are going to learn this month is what is going to stay in your head. This is what is going to be crucial within you. This is what is going to be that you're going to carry forward for the exams. So this month is going to be very crucial for you. You could have studied over the last 1 year, that's fine. But this month, February, for March exams is going to be very, very, very crucial for you. Keeping that in mind, I am going to give you a plan and I will walk you through the plan. And then we are going to see how to approach that plan, how to approach the exams as well. Sounds like a plan, everybody? Hi, sir. I started studying 2 weeks before my exams because of A level. Can I study full syllabus before the exams? Yes, you can. You will not have any problems provided you can utilize the next 25 days properly. But you need to start today. You need to start today. If you come to me and ask me next Thursday, hey Zian, uh, I've not started, only today I'm going to start studying. Will it be enough? We'll have about 18 days then. I would say, still, yes, you should be able to pass, not a problem. But probably you can't go for that price. You can't go for that 70s. No, probably you can score in 50s, 55, 60, between 60 you can score if you start next week. But if you come the week after, that is about 10 to 11 days for the exams, if you come and ask me, Zian, do you think I can pass the exams? I would say, well, I don't think you could be able to pass the exams. Got only 10 to 12 days. Uh, you've not started anything, that means you're taking a big risk. So you're taking a big risk, so I wouldn't recommend 10 or 12 days before the exams for you to sit for the exams. That's not going to work. Okay, so if you ask me towards the end of the exams, absolutely no, that's not going to work unless otherwise you have a miracle in you or your God, whoever it can be, is going to help you in the exam. You do some prayers and it works out for you. But the best bet is to start now for the exams, because I know for a fact that if you start now, not just 70s, there have been instances that you can go for a prize, you can crack a prize. Does that make sense, everybody? Does that make sense, everybody? Yes or no? Does that make sense, everybody? Yes or no? Okay, super. Right. First, I'm gonna put across the study plan. Just give me a moment. I'm going to put across the study plan so you know exactly what you have to do. And then, of course, we are going to get into what we are going to do for the day. All right. All right. That's my study plan for the March 24 exams. Well, guys, let me tell you, the study plan that I do has been sat, thought through, and based on the attention level that you have to give for the topic, based on my experience, based on the number of prize winners I have produced, it is drafted. I've seen success before, and I believe we should be able to also find success for the March 24 exams. But everybody should be coordinating. Everybody should be working through. Only then you'll be able to work around the plan. Lovely. Well, attention level. What do I mean by attention level? I'm talking about how much of your attention, how much of your time, how much of your prominence that you need to give. Okay, if it's your parents, you'll give a lot of prominence, but if it's a friend, yes, some sort of a prominence, but if it's your colleague, little prominence. So you know where to benchmark people, right? Same way, we are going to benchmark the areas in terms of effort. IAS 7 statement of cash flows. I wouldn't recommend you to spend a lot of time there. But yes, of course, you'll have to go through 1 or 2 days before the exams. I want you to go through the technical articles. You don't have to spend a lot of time there. IAS 8, the FR paper is made up of accounting standards. So I have just put up the accounting standards. IAS 8 is a part of your F3 area, accounting policies, changes in estimates and error. And I have handpicked questions from Kaplan, which might help you. Attention level, medium. IAS 10, events after the reporting period, attention level, medium. IAS 12, income taxes will be tested. Attention level, medium, but it will be tested most of the time as a part of your section C, but probably you can get it in section A and B. By any chance, if you get this, I'm going to show you a shortcut to get your answer. By applying 3 or 4 steps, you get the answer. IAS 16, my dear students, is tested in every exam session. Every exam session I've seen IAS 16, that is very basic revaluation. You can have depreciation. So that is tested. I want you to have a proper understanding of the standard. IAS 20, accounting grants and disclosure of government assistance is tested high. IAS 21, foreign currency is tested. IAS 23, borrowing cost is equally prominent. 33, earnings per share is also prominent. 36, impairment can come as a part of section C, notes. So it can be as a part of a long question, income statement, balance sheet can be tested. IAS 37 is very, very, very important, frequently tested. 38 is frequently tested and 40 is frequently tested. So from here to here, you are going to give very high priority, very high prominence. And I've given you the days as to how to plan your days. I'm telling you, okay, fine, day 1, you plan this. Day 2, you plan this. Day 3, you plan this. So you have 12 days, right? So next 12 days, you can easily work around. So like I told you, today is the 8th of February. You've got 12 days, 20th of February, the entire syllabus is done. Now we are looking at starting today, this minute you're going to start. You're not going to start next week. You're not going to start tomorrow. You're going to start tonight. Once the revision is over, you're going to start. Keeping that in mind, this is how it will work. But if you choose, no, I'm going to do next week. I'm going to do following week. Every week you delay, your 90 marks that you're going to score will come down. There's an inverse relationship. Anyway, coming back, IAS 41, biological assets, agriculture. Not a very detailed standard, but you need to know the recognition and measurement. Fair value minus any cost to sell. IFRS 5, non-current assets for sale and discontinued operations, very high, can be tested as a part of section C. IFRS 9, financial instruments, is tested, very highly tested. You need to understand financial instruments. You need to understand how to account for it. And there is a little thing that you need to keep in mind, a little step that you need to keep in mind, which I will also be covering as a part of the revision. IFRS 10 consolidation is very, very, very important. Every exam session will have IFRS 10. Every exam session will have IFRS 10. Every exam session will have IFRS 9. IFRS 13, the hierarchy, the fair value hierarchy, you need to know. IFRS 15, revenue is very, 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 very important. IFRS 16, leases is important. And ratio analysis is tested in every exam session. Every exam session, ratio analysis is tested for 15 marks. That is tested. And conceptual work framework with PNL and statement of financial position. So basically, these are your areas that you need to focus. And then I have my plan divided into two set of students. Okay, I know there are full-time students and I know there are part-time students. Full-time students are any students who do not work. You don't have any work. You are at home. Part-time students are students who are working. If you are a full-time student, it is very important you cover 100% of the revision kit. You should have covered 100% of the Kaplan revision kit. There is no negotiations there. You got to cover last 5 past papers in the practice platform. You have the ACCA practice platform. In that, you have to cover all 5 papers, last 5 papers in the practice platform. You got to also cover all the technical articles and examiners reports from accaglobal.com. This plan requires maximum 4 hours a day for both full-time and part-time students for this plan to apply. But if you're a full-time student, I know for a fact you can commit about 7 to 8 hours. So gives you enough time to cover the entire revision kit. And if you start now, by 20th you're done, your last 10 days are exclusively for past papers. Exclusively for past papers. Without past papers, please do not go to the examination hall. And during our revision phase, we are simply going to look at past papers. It's going to be covered with past papers. If you're a part-time student, meaning you are working, if you're a part-time student, you got to cover as much as possible from the revision kit. Well, bare minimum, you have to cover all these questions that I've given you. You got to cover. But the more you cover, it's better for you. I know part-time students, you are committed more than full-time students. So best you cover as much as possible. Cover last 5 past papers in the practice platform, no negotiations there. And you got to cover all technical articles from ACCA as advised, like I tell you. I will show you what are the areas to do. Well, does that sound like a plan, everybody? I'll share this with you as well. Does this sound like a plan, everybody? Everybody sounds like a plan? All right. Brilliant. Now this will be shared across to you. Okay. This is open for anyone. If you have been a student of me, okay, there have been some students who are coming on YouTube, coming on Zoom. But if you're a student of me, all this can be covered through my videos. I would have covered all this through my videos. So please go back. You would definitely have my recordings. Please go back, go through my recordings for the next 12 days. That is more than enough. But if you are not my student, that's still fine. You can use Kaplan, you can use Study Hub, you can use BPP, any materials, but please make sure you get your theory right. So if you're my student, nothing to worry. You would have been given access to the recordings. In addition to whatever I taught in class, you can still go and revise. But any outside students, because we've opened it up to all the students, please make sure that you cover all this before the exams. Kaplan is fine. I don't have any issues there. Kaplan is good. Right. Brilliant. Can we get going? Everybody, if you're okay, if I can get an A, can we get going? Can you give me an A, everybody? Is Study Hub notes and questions sufficient to sit for the exams instead of Kaplan? Yes, Study Hub is enough. Looks sufficient. But if you can have the Kaplan kit with you, it's good as well. I mean, it'll really complement. All right. Super. Well, when you take your FR paper, right, you need to make sure that for the March 24 exams, you need to know that ratio analysis will definitely come in the exam. There is no question about it. You will definitely get ratio analysis in the exam. Number two, statement of profit or loss and balance sheet will definitely appear. Consolidation will definitely appear. In section C, out of these three, any two can come. But what can basically happen is your ratio analysis and P&L balance sheet can come and consolidation can be tested in section A or B. There have been instances like that. So probably be aware that your examiner can test these three anywhere in the syllabus. So you got to be careful and you got to have that experience in handling these questions. So ratio analysis has been your examiner's favorite area. And I've seen your examiner talking about it more frequently in every exam session. So first and foremost, I thought, let me take you through a ratio analysis, but with consolidation. Ratio analysis with consolidation. Sounds like a plan? Superb. We are going to look at a question. So onto your screen, everyone. There you go. Okay. We are going to look at Harbin, a very challenging question. But the moment we go through a question like this, it gives us a lot of confidence to tackle any similar questions. Okay. When looking at ratio analysis, now when you take our FR paper, ratio analysis is about analyzing a business. Analyzing a business for the shareholders, stakeholders, for the users. We are going to understand what is presented in the financial statements. Does it truly reflect what it has to be? Well, does it make sense? Business sense? Does it make sense for us to invest in the company? Is the company a good company? Is the company having any difficulties? Are there any going concern issues? How's the profitability of the company? Well, you may have profits, but do you have enough cash flows? Questions to answer. Your revenue is going up. How is your revenue going up? Is it because increase in revenue or increase in customer base? Your costs are coming down. How are your costs coming down? Your profits are going up. What's happening to the company? What's happening to your asset base? You need to talk about that to the examiner. You're going to talk about the working capital and how the working capital is being managed. Is it being managed effectively? And what is happening in terms of the gearing? How is gearing affecting the company? And of course, in the exam, you will be required to calculate some ratios. So for that, you need to know the formulas. If you do not have the formulas, please let me know. I'll share it across with you. I would have shared it across to all my students who have been a part of my class. I would have shared it with you. So there you go. We are going to look at the requirement. First, in the exam, the very first thing that I'm going to do with you will be to look at the requirement. The requirement says calculate ratios for Harbin for the year ended 30th September 2007, equivalent to those calculated for the year ended 30th September 2006. This is what you calculated for 2006. You are going to calculate for 2007. Okay, superb. Assess the financial performance and position of Harbin for the year ended 30th September 2007 compared to the previous year. Your answer should refer to the information in the Chief Executive's report and the impact of the net assets of Fatima. A very, very, very important, crucial point. Assess the financial performance. Assess. Go. Check what has happened. Go and check what has happened. Assess an assessment. Check what has happened for the financial performance, P&L, and position, balance sheet of Harbin for the year ended 30th September 2007 compared to the previous year. Your answer should refer to the information in Chief Executive's report. Probably there's a Chief Executive's report. There you go. Extracts from the Chief Executive's report. Your answer should refer to the information in the Chief Executive's report and the impact of the purchase of the net assets of Fatima. Meaning, you are purchasing another company. What is the impact of that company in our current year financial statements? Well, if I am going to do this question, I wouldn't mind spending at least 2 to 3 minutes to understand the requirement, because requirement is very important in the exam. I want to know what has happened. So requirement is very important. So I wouldn't mind spending 2 to 3 minutes in the exam. Exam technique, always go to the requirement first. Are we clear? Everybody, are we clear? Right. Let's take approximately 5 minutes. I want you to read the scenario, the question on your own. I want you to understand what has happened. And I want you to prepare a little summary on your own. A little summary, that would do for me. I want you to prepare a little summary where you could say, why isn't this coming? Okay. I want a little summary. In the summary, I want you to summarize. Well, whilst you read, in the summary, I want you to summarize on your own what has really happened. Meaning, the financial statements that is provided, does it actually reflect the performance? So what is provided, does it reflect the actual performance? Number two, from last year to this year, what has happened? Just there could be a profit, there could be a loss. Why is there a profit or loss? What has happened to the cash position of the company? Is the survival affected? Do we have a problem with the survival of the company? If you have money, will you invest? Will you invest your money? If you have money, are you going to invest? 6, working capital management. Number 7, strategies, management strategies, and policies. Okay. I want you to, while reading through, I want you to start answering these questions. What has happened? Why is something happening? So can you share the question? It's pretty small to read. Okay, fine. Let me share the question. Okay. I want you to tell me, okay, fine, this is what has happened within the company. Everybody, before we start, yes, you understood what I want from you. Yes or no? Yes or no? Okay, everybody understands what to do. Okay, I'm approximately giving you about 5 minutes and I'm sharing the question also with you. I want you to do it. I want you to summarize and then just say done. You're going to give me, because guys, we need to talk to each other, right? If we don't talk to each other, then I won't understand what exactly your position is now. We need to start talking. So please, there's about 17 here. I want all 17, actually 16 without me. I want all 16 to respond. Hey, look, there's no problem. This is, I'm done with this. Just give me a done. So it will help me to go further. Your time starts now. I'm giving you approximately 5 to 6 minutes. Go on. Yes, I am done. I'm waiting for a response. I am done. I am done, everybody. I am done. Everybody done. Hello. Hello. No, not done. Okay, I'll give you another 2 more minutes. Fine. I'll give you another 2 more minutes. Take your time. All right, let's do it together now. Okay. You've had enough of time. Right. Now, when you look at the question says, shown below are the recently issued summarized financial statements of Harbin, a listed company, for the year ended 30th September 2007, together with comparatives for 2006 and extracts from the chief executive's report that accompanied the issue. What do you have? The income statement. Revenue, cost of sales, gross profit, operating expenses, finance cost, profit before tax, income tax, and profit for the year. Your revenue will be given in US dollars, so just forget RM. Has gone up from 180 to 250. Your cost of sales has become 150 to 200. So in line with revenue, your cost of sales have gone up. Your gross profit has become 50,000 from 30,000. Your operating expenses are shooting up. You have finance cost this year. Last year, you did not have finance cost. So your conclusion, finance cost is going to eat your profits. Last year, you did not have finance cost. So this year, you have finance cost. Finance cost will eat your profit. One thing to understand, why do you have finance cost this year? Did the company borrow? Why did the company borrow? What is the impact of borrowing? Your profit before tax has doubled from 8,000 to 16,000. Your profit for the period has also doubled from 6,000 to 12,000. Conclusion, what do you think? Does the company look good or bad, everybody? Does the company look good or bad? Good or bad? Get going, everybody respond, get going. I want everybody to respond. I want everybody to respond. The company looks good or bad? Get going. So far it's good, looks good. Okay, brilliant. Right, let's go further. Balance sheet, non-current assets, your asset base has gone up more than double. Goodwill on acquisition. Last year you did not have goodwill, this year you have goodwill. What is goodwill? Goodwill is the premium paid over and above subsidiaries' net assets. Inventory has gone up. Trade receivables have gone up. Your bank balance is not positive anymore. Your bank balance is negative. From 14,000, your bank balance has become negative. Is it a good sign or a bad sign? What do you think? Is it a good sign or a bad sign? It's a bad sign. It's not a good sign. What is important for a company? What is important for a company? Profits or cash? What is important for a company? Liquidity, cash. Well done. Equity is the same. Retained earnings is going up by 2,000. Your loan is 100,000. Last year you did not have anything. This year you have a loan of 100,000. Probably that is why you have finance cost here, where here of 8,000. Well, you have a bank overdraft. From a positive cash balance, you have a bank overdraft. Your payables are going up. Your current tax payable is also going up. What is your impression about the balance sheet? Good, okay, or bad? Impression about the balance sheet. Good, okay, or bad? It's okay. So you are not as happy as how you were. You are not as happy as to how you were with the PNL, correct? Okay, lovely, Sarah. Let's get going. Extracts from the chief executive report. So chief executive has given a report and we are given the extracts of the report. Bad. Although they have revenue, they don't have liquidity. Okay, super. Let's go further. Highlights of Harbin's performance for the year ended 30th September 2007. An increase in sales revenue of 39%. Sales revenue has gone up by 39%. Sales revenue has gone up by 39%. Sales revenue has gone up by 39%. Gross profit margin up from 16.7 to 20%. Gross profit margin up from 16.7 to 20%. A doubling of the profit for the period. These three statements, what do you think? What do you think about these three statements? What are your views about these three statements? What are your views about these three statements? Well, I know it says about the performance of the company. I'm not saying no. Good performance, overall positive outlook for the business at the face value indicates good performance, but a close look at the financial statements says otherwise. What does that mean, Amna? Explain me further, Amna. In response to the improved position, the board paid a dividend of 10 cents per share in September 2007, an increase of 25% on the previous year. You have also been provided with the following further information. On 1st October 2006, Harbin purchased the whole of the net assets of Fatma, previously a privately owned entity, for 100 million. The contribution of the purchase to Harbin's results for the year ended 30th September 2007 was revenue 70,000, profits 22,000. What do you think about Harbin? Is Harbin a good purchase or a bad purchase? Looking at the information with this, is Harbin a good purchase or a bad purchase? It's a good purchase. Amna, very well done. That's a good response. I'm very happy as to how you've seen it. There were no disposals of non-current assets during the year. And let's go further. The following ratios have been calculated for Harbin for the year ended 30th September 2006. We were asked to calculate the ratios for 2007. They're supposed to calculate for 2007. Return on capital employed, net assets, net profit margin, current ratio, closing inventory holding days, trade receivables, trade payables, gearing. We've been given information to calculate ratios for 2007. And in the exam, I'm gonna calculate my ratios as well. So I'll be given a table like this. I'll be given a table like this, and I'm going to calculate my ratios. So my ratios, 2007 already, 2007 to be calculated, 2006 already given. I have to calculate ROCE, correct? Net asset turnover, net profit margin, current ratio, inventory days, trade receivable days, trade payable days, and gearing. Your examiner, okay, we can't see the Excel. Give me a moment. Can you see Excel now? Everybody, can you see Excel now? There you go. Your examiner has also given the formulas that you can use. 2006 figures already given, 7.1%, 1.6 times, 4.4%, 2.5 times, 37, 16, 32, and nil. You are supposed to calculate ROCE. Have you already calculated or you want to calculate it with me? Have you already calculated or you want to calculate it with me? Right. Let's do it together. I'll help you all with it. Okay. Right. Let's do it together. Your ROCE, profit before interest and tax, over total assets less current liabilities. That is going to be your capital employed. Profit before interest and tax means you're going to take your operating profits. You're going to take your operating profits. Okay. So please go back, take your operating profits. Please go back, take your operating profits. How much is your operating profits? How much is your operating profits? Your operating profits is going to be profit before interest and tax. Your profit before tax is given, so you got to calculate your profit before interest. Therefore, your examiner has given you 16,000. To that, you add 8,000, making it 24,000. So profit before interest and tax is taken. This over capital employed. Capital employed is going to be your capital employed is going to be your total assets less current liabilities. How much is your total assets? Your total assets is 258,000 minus current liabilities 38,000. Therefore, over 258,000 minus 38,000. 10.9, can I make it 11%? Everybody with me? 11%. Did we get it right, everybody? 11%. Did we get it right, everybody? Yes. I'm sorry. I think I've taken current assets. It has to be current liabilities. So I'm sorry. I've taken current assets. It's not current assets. It has to be current liabilities, which is 44,000. Okay. I'm sorry. Once again, it's 11%. Okay. Once again, it's 11%. Okay. It has to be current liabilities, not current assets. My total assets minus current liabilities. I mistook the figure. I took it wrong. All right. Next, net asset, which is equal to capital employed over turnover. Okay. Capital employed is already taken. 258 minus 44. 258 minus 44 already taken. So I want you to calculate and tell me what is the net asset turnover. What is the net asset turnover? Please tell me the net asset turnover. What is the net asset turnover? Okay. Your total revenue is 250,000. Over capital employed, we already calculated. It was 258 minus 44,000. That's your net asset turnover, 1.16. Correct? Amna, are we clear? Okay, super. You got to be very careful. Your net profit margin, straightforward, take your net profit equals 12,000 over your revenue 250,000 as a percentage. That gives you net profit is 12,000 over 250,000 as a percentage gives me 5% approximately. Correct? Correct? Coming back, your examiner here, now we know net profit means we take it after tax, but your examiner here says before tax. So let's take before tax. But if the examiner has not mentioned that, please take after tax. Here the examiner clearly says before tax, so let's take before tax. If this is not there, please take after tax. So since this says before tax, I'm going to go back. I'm going to take, what is it before tax? So before tax, it's going to be 16,000. So I'm going to work with 16,000. There you go. So I've got 6%. I've got 6%. I've got 6%. My current ratio will be my total current assets over current liabilities. My current assets total is going to be 38,000 equals 38,000 over my current liabilities, which is standing at 44,000. Therefore, 0.863. My inventory days. My inventory over cost of sales into 365. My inventory is going to be equals 25,000 over my cost of sales is given to me, which is 200,000. Into 365, 45.625 days. Next, my trade receivables collection period. My trade receivables over sales into 365, which is equals 13,000 over my sales is 250,000 into 365, 18.98. My trade payables, 23,000 over my cost of sales, which is 200,000, close brackets, into 365, 41.975. And my gearing, examiner says debt over debt plus equity. My total debt given here is 100,000, correct? My total debt given here is 100,000 equals 100,000 over, open brackets, 100,000 plus my equity is 114,000 gives me 47%. Well, those are my ratios in the exam. My ratios will give me 8 marks. Therefore, every ratio that I calculated here will give me 1 each. Are we clear? Are we clear, everybody? Are we clear, everybody? Yes. Everybody on track with me? Super. Now, the ratios are calculated. Now, I need to understand as to how I'm going to do my assessment. So, I'm going to do my assessment of financial performance and financial position. So, assessment of financial performance and position. So I'm going to do my assessment, but before that, I want to understand what has happened within the question. So let's try to understand what has happened within the question. Well, we know the profits have gone up. We know the balance sheet doesn't look that strong. And what has happened with the ratios? The ratios are here. Looks good. ROCE looks good. Net asset turnover, your financial position doesn't look great. Net profit margin has gone up by slightly 1.5%. Current ratio from 2.5, the company's working capital has dropped significantly. Inventory days, you're taking more days, you are using more, you're holding your inventory more than before. Trade receivables have slightly increased, but that has no major change in our operations working cycle. Trade payable days have gone up, yes, by about approximately 10 days. Gearing is a bit of a problem for us. But our analysis has to be more sensible. Our analysis has to be more sensible. Our original argument was the company is making a profit of 12,000, which is double the last year. Our original argument was the revenue of the company is very, very, very strong. We based a lot of information. We spoke based on this information. But, do they really, really reflect the actual performance of the company? Coming back to my basic question, what has happened? What is provided? Does it reflect the actual performance? Well, no. The chief executive is lying. Well, no, Zian, the chief executive is not lying. You could come and tell me. I took the calculator. I saw the difference here. I saw the difference, 70,000 over 180,000, and I saw the increase in revenue. The increase in revenue, Zian, was 39%. You could tell me that. You could also tell me, I did calculate the gross profit margin, which has gone up. You could also tell me a doubling profit. Zian, are you blind? From 6,000 to 12,000, the profit has gone up. Correct? But the catch is here. On 1st of October 2006, Harbin purchased the whole of the net assets of Fatima for 100 million. So can we say something like the chief executive could have been inexperienced? No. They could be manipulating. Harbin purchased the whole of the net assets of Fatima, previously a privately owned entity, for 100 million. The contribution of the purchase to Harbin's results for the year ended 30th September 2007 was this, meaning your 2007 statements are consolidated. 2006 statements are not consolidated, meaning the revenue that you see here, 250, includes the 70,000 from here, meaning your revenue has not gone up. From last year to this year, your revenue has stayed stagnant, 180, 180. Profits gone up by 12,000? No, in fact, you have got a 22,000 profit here. So this has contributed to 12,000, means you have actually made a loss of 10,000. Harbin as a company alone, not as a group, alone has made a loss. When you consolidated it, yes, I understand. Yes, I agree. Yes, I agree. The company is making a profit. But whatever is given looks very manipulative and does not actually reveal what the reality is. Do you think now the company is actually doing well? Yes or no? Everybody respond. Exactly. That's how I want you to start analyzing. Now you need to be very, very, very careful, because there will be a catch in the exam. Okay? Fine. Can we start responding? Everybody? Can we start responding, everybody? Okay. Super. So first, we're going to start talking to the examiner as to what has happened in terms of the performance. During the current year, Hobby has performed very well in terms of its profitability. Calm down, calm down, calm down. Let's talk as to what has happened in terms of profitability. The primary ratio of shareholders, what is the primary ratio of shareholders? ROCE is at 11.7%, which is a drastic improvement from last year. This ratio will, of course, make shareholders glad. As a shareholder, you're very happy. Further, Harbin, you can use H the moment you say here Harbin, H in the exam, you can say H, not a problem. Further, Harbin has recorded a doubling profit in the current year with its revenue also increasing significantly. Overall, at the outset, Harbin looks a healthy profit-making company. But is that the case? 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 But is that the reality? Everybody, is that the reality? There you go. No, the acquisition contributed to the improvement. That's right. So let me take it further. A closer look into the financials of Hobby does not reflect what the presented financial statements or the CEO's comments. A closer look in the financials of H. Let me take it to calibrate. A closer look into the financials of Harbin does not reflect what is presented. What is presented in the financial statements or the CEO's comments. If the financial statements are assessed thoroughly, it can be observed that Harbin's financial statements are inflated are inflated with Fatimas from this point onwards. Let's say S Fatimas results. Are we clear? Are we clear? Are we clear, everybody? Super. Well done. Now let's start talking about what has happened. Okay. The current year financial statements of 2007 are not just Harbin's performance, but this also includes the financial of F. Therefore, it is the consolidated statement which is being compared with the last year's individual performance of Harbin. You understand? Do you get my point? If Fatima's performance is excluded from the group's financials, the performance of Harbin is different. In fact, Harbin will be making a loss in the current year without Fatima's inclusion. In addition, there would have been no increase in revenue. And further, when compared to the last year, Harbin's performance would be deteriorated. Just ignore typos, that's okay in the exam. Now, do you understand the way I'm bringing? During the current year, Harbin has performed very well in terms of profitability. I'm talking to the examiner, look, it looks good. The primary ratio of shareholders is at 11%, which is a drastic improvement from last year. Yes. This ratio will, of course, make shareholders glad. Yeah. Further, it has recorded a doubling profit, not doubling profit, is a doubling profit in the current year, with its revenue also increasing significantly. But typos is not a problem in the exam. Overall, at the outset, H looks a healthy profit-making company without a problem. But a closer look into the financials of H does not reflect what is presented in the financial statements or the CEO's comments. If the financial statements are assessed thoroughly, it can be observed that H's financial statements are inflated with Fatima's results. The current year financial statements of 2007 are not just Harbin's performance, but this also includes the financials of F, Therefore, it is a consolidated statement which is being compared with last year's individual performance of H. If F's performance is excluded from group's financial performance, the performance of H is different. In fact, H will be making a loss in the current year without F's inclusion. In addition, there would have been no increase in revenue, and further, when compared to last year, H's performance would have been deteriorated. Are we clear with that? Yes or no? Yes or no? Everybody. I want everybody to respond. I want everybody to respond. Okay. We've spoken about the profitability. Now we can start talking about the working capital management. Working capital management doesn't look that great this year. It's not impressive, so we can start talking about that. The calculated ratios for working capital are not actually impressive. Impressive, there you go. It's not impressive compared to 2006. It appears that the company is struggling with its working capital. From a positive cash flow position, the company's cash has now become an overdraft. Clear? This is a major concern to the company, as this may affect the operations. You do not have enough cash flows, correct? Well, to make things even difficult, Harbin has proposed a dividend of 10 cents, correct? Which is an increase from the previous year, because they say there's a 25% increase from the previous year. Further, the ratios calculated gives a serious warning to the management to undertake immediate actions to strengthen the balance sheet. It is. Overdraft is not a healthy cash injection into the company. Right. There you go. We've spoken about profitability. We've spoken about uh, profitability. We've spoken about the working capital. We've spoken about the working capital. And now we're going to work on financial gearing. We're going to work on the gearing. We're going to speak about the gearing. What do you think about the gearing position of the company? What do you think about the gearing position of the company? Does it look good or no, it's not looking very positive? The gearing position of the company does not look good. It looks bad. Okay. Meaning you have actually borrowed 100,000 this year, correct? This 100,000 this year that you have borrowed looks like you have borrowed to acquire Fatima. Correct. So yeah, I mean you were a debt-free company, but now you have a debt of 100,000. It's okay, provided the reason for you to borrow is justifiable. So we can start talking about what has happened here. Okay, let's go further. The gearing level of Harbin has significantly gone up to 47% from a mere 0% last year, which is a debt-free company. It looks like the loan was obtained. It looks like the loan was obtained to finance the purchase of Harbin, of Fatima. The current gearing level looks a bit risky and concerning. This has resulted in an additional finance cost. Perhaps finance cost will eat down profits and cash flows. It's important to take or to understand why Fatima was purchased through a loan. It's very important. I believe it is very important as to why Fatima was purchased through the loan, because what if Fatima was one of our biggest competitors? What if we remove competition? What if we had removed competition? Now we have the flexibility to improve our profits. You never know. It could have been a good purchase. You never know. So I do not know why they did it through a loan. but it's risky. It's a problem. That, of course, we need to agree. We need to confirm that it is a problem, but I need to know why it's a problem. Superb. I'm here. I want to give a conclusion. I want to give a conclusion. My conclusion would be overall, Harbin does not indicate overall Harbin's performance does not indicate what the CEO is highlighted in his report. Okay, does not indicate what the CEO has highlighted in his report. Harbin's performance has clearly uh, gone down, and and the profit and revenue is up only through the contribution of Fatima. In addition, for my assessment to be more conclusive, I need further information such as number one, I want to understand the macroeconomic environment of the company of Harbin. Number two, I want the budgets and forecast of Harbin because that will help me understand what has happened. Is it only this year or over a period of 4 to 5 years? What has happened? Budgets and forecast of Harbin. Why did the management execute the purchase of Fatima? For competitor analysis. Number five, future management strategies and policies. So all this information will give me a clear indication as to if we have done a proper solid purchase or not, and what has happened historically with the company. Does that make sense, everybody? Everybody, does that make sense? Let me give you a proper 5 minutes for you to go through the answers quickly on your own and give me a done. Okay? Quickly go through on your own and give me a done. Guys, are you all done? Guys, are you all done? Everybody? Are you all done? Are we clear? Are you all done? Everybody, please respond. Everybody, please respond. You understood, right? Okay, please share the link to this. Okay, I've already shared the question. I'm gonna share the link to this question, okay? To the answer. Well, you can't change anything there, by the way. You can't make any changes there, okay? Harbin. So can you please share the study plan? Okay. Let me share the study plan as well with you. Okay, fine. Did you get the study plan? Did you get the study plan? I just shared it on our Zoom chat itself. Okay. Guys, the very first thing that you need to understand is you can't write an answer like this. Meaning we are not writing under exam conditions. We are not writing under exam timing. And this is probably the first question that you are doing. So it's going to be very difficult for you to do something like this immediately. But you need to start practicing. You need to start working yourself. You need to make sure that within the stipulated time frame, you do it. So to make sure that we are on track with that, I'll just share it across. PPIM, we have a revision game plan. In this revision game plan, this is the online version. We have a recorded version where I am doing questions in timing. Within the stipulated time period, I'm doing the questions. Half an hour means within half an hour, I do a ratio question. I do a consolidated P&L, consolidated balance sheet. Students of PPIM, you will get access to this by the 15th of February. Students of PPIM, you will get access to this by the 15th of February with all the contents in terms of the revision game plan, which is very effective for you when doing questions. You got the study plan, and everybody give me a yes. Did you understand? We're done. Okay, perfect. Super. Right. Guys, I mentioned students of PPIM get it for free. Students of PPIM get it for free. If you are a PPIM student, through our portal, you will be given freely, access to it freely. Okay. All right. Students, the revision session, as I mentioned earlier, I'm sure I would have mentioned it earlier, will be broken into two. Thursday and Friday for FR. Okay, same time, Thursday 6:30 to 8:30 and Friday probably from 6:30 to about 8:30, giving about 4 hours for a week. So today, the session, we've looked at ratios. Tomorrow, with the revision, I've got my students, FR students as well. Like informed earlier, FR students will be working on the cash flow statements. So tomorrow, we will be meeting once again. Revision students, if you want, you can join. If not, it's still fine. If you revise cash flow, it's still fine. I'll be looking at a past paper question for cash flows. If you want, you can join. You can request the link to add you on our WhatsApp, the revision game plan group, and you will be shared with the link for you to join. All right. If you're not in the group, please drop a message to our hotline 0777 They will add you. Right. In the meantime, I hope you follow whatever I've been talking to you today from scratch. Please start working around the study plan. You will be able to get through the exams properly, but you need to start from today. So I'm meeting you all tomorrow again at 6:30 sharp, like how I started today, to take things further from there. Thank you very much, guys. Enjoy the rest of the day. Bye-bye.